going on, YouTube? Canadian Gold Saver here with a special video, but obviously wanting to get a couple things out of the way. Remember, I am not a financial advisor. Do your own research. Don't invest more than you can afford to lose. And just another disclaimer, I'm going to be talking about the number one stock that I'm currently invested in. That's correct. I do own some of these stocks that I'm going to be talking about. So there's no conflict of interest there. I'm letting you know well in advance that yes, I am heavily invested in this stock. So let's get right to it. The stock that I'm talking about is ARC Resources for the ticker ARX through the Toronto Stock Exchange. Let's take a look first at that page. If you do a quick search on Google for ARC Resources, you can clearly see that it is a company out of Calgary that is working on oil and gas. It's an oil and gas company. So first things first, whenever you are investing in a company, in a stock, you want to do your research, know what you're getting into, know what the company is about, right? Oil and gas, yeah, I think right now in this day and age, it is a little bit tricky. A lot of people are moving away from fossil fuels. People are looking at electric cars as an option, but you know what? I still think that's 5, 10, maybe even 20 years away before oil is really starting to take a hit. So I think right now there may be still money, in this field. So this may not be the best way to do things, but this is the way that I do things. So again, just sharing with you my experiences and how I do things. I don't really care if people laugh at me at how I analyze certain stocks and whatnot, but it just works for me. So obviously, besides looking at the company and what they do, you want to take a look at some of their stats, right? So right here, you can see that their market cap is $2.53 billion. So that means how much it's worth if based on the share price and how much stock is out there. So 2.53 billion, I think it's a pretty sizable company. It would definitely take a lot for this company to go under, knock on wood. So that's why I think it's still pretty safe. It is going to take a big event in order for things to go south. So taking a look at the charts, you got your 1 day, 5 day, 1 month, 6 month, and then the 1 and the 5 years. Now, what I typically like to do is obviously I want to look at all of these charts here, okay? And what I like to tend to do is I take a look at the 5 years. Sometimes they give you a 10-year chart, and I take a look at what's the highs and what's the lows. Down here, they usually give you the 52-week and the 52-week high and the 52-week low, and I like to see what the current price is and whether it's good to buy or not. Obviously, the lower it is, the more value you're going to get, right? So the 52-week high here, for example, is $10.49. The 52-week low is $5.37, which makes the median, the middle somewhere around $8 or so. So now the price is at $7.13. I still think it's a pretty good stock to buy. As long as you're under that halfway mark, then there's definitely a lot more room for to go on the upside than there is down. Taking a look at the 1 year, taking a look at the 5 year, for example, it's not going to be unusual for this stock to go up to $23, for example. But taking a look at the 5 year trend, yes, it is going down. So that's why obviously you want to be aware of, where you're getting into the market, right? So right now I'm in actually about the $9 mark, but I constantly buy and sell depending on how the market is. I'm still buying right now. So the good thing about this particular stock is that it does pay dividends, all right, in the form of 5 cents per share per month. Okay, so right now with the share price of $7.13, that gives you about an 8% yield in terms of dividends, all right. So just to give you a clearer picture of what that basically means is that if you own 50 shares, which technically costs around $356 in order to get that 50 shares. Every single month, you'd be getting a dividend of $2.50. If you were to invest a little bit more and get 1,000 shares, that costs around $7,000 every single month. No matter what, as long as you don't sell it, obviously, you'll still be getting $50 in dividends per month. So even if you don't buy, sell, and make profits on that, if you end up having to hold on to the stock because perhaps the value of the stock drops and you're not comfortable taking a loss, then you're still getting those dividends every single month. Just to give you another example here on why I think this is good is that the lower the